real estate sector is concerned. It was a pleasure speaking with you. But to the big story of the morning, the Bank of Japan shocked global financial markets by increasing the cap on the 10-year yield from 0.25% to 0.5%, and Asian equities fell and the yen strengthened after the announcement. Lata is joining us with more details and more about the sudden announcement from the Bank of Japan. Lata?
Well, this is absolutely a bolt from the blue because the BoJ Governor Kuroda had even a few weeks ago said that he would not turn hawkish and that increasing the cap would tantamount to a rate hike. But that's exactly what they have done. The BoJ, just for information, has been controlling the yields along the curve, and they were controlling the 10-year yield at 0.25%. Today, they said they will allow it to rise up to 0.5%. Now, basically, that's doubling the cap. And this has led to a rise in yields and therefore the strengthening of the yen to 133. It was, you required 137 to buy a dollar. Now you need only 133 yen to buy a dollar. That's the level of strengthening that has happened. Yields in the Japanese market have also gone up. But basically, world over, this is seen as one more central bank getting hawkish. And therefore, it has resulted in risk aversion in all financial assets. So equities all across Asia have weakened, and there is a readjustment in the currencies. Many people were using yen as a currency, as a carry currency. You could borrow cheap in yen. Now you can't. So they're removing bets on other financial assets. It's very confusing because the BoJ governor is now saying that he sees the inflation receding. Actually, Japan's inflation now at 1.99 or almost 2% is the highest since 2014. So this was seen as a hawkish move because of that inflation. But now he says that the Japanese reaction is more to volatility abroad, which was ruining the functionality within the country, and that he sees inflation falling. So there are a bit of contradictory statements. They have not changed their short-term rates, which remain at -0.1. They have also said that they will buy more bonds. They were buying 7.3 trillion yen of government bonds every month. Now they are going to buy 9 trillion. So that actually is a liquidity infusing or an easing action. But it's coming along with a very, very hawkish action of allowing yields to rise. So the market is still coming to terms. They basically see the move as Japan exiting its loose monetary policy, or at least turning a little more hawkish. At the moment, that is the understanding of what Japan has done, in spite of the statements that are coming from the BoJ, which appears to be to, smooth ruffled feathers. As you can see, the yen is still very strong.
Okay, all right, Lata, thanks very much for that. And like you mentioned, it is risk aversion because we have the Nikkei, which is down over 2% and sustaining those losses since the piece of news came out earlier this morning. Time for a short break. On the other side, we'll be talking to Vimal Kejriwal of KEC International to discuss their new order wins. Stay tuned.